You know, when you think of Canada's big banks, a pretty familiar list probably pops into your head, right? Well, in 2025, one of them made moves that were so big, they're basically rewriting that list entirely. We're talking about National Bank of Canada, and believe me, this was their year of historic transformation.
So the bank is headquartered in Montreal, and for a long time, it's been a massive force in Quebec. But 2025, that was the year it planted its flag, and I mean firmly, across the entire country. It was a signal of a whole new level of ambition. And honestly, the story of how they pulled it off is just fascinating.
And hey, you don't have to take my word for it. This comes straight from the top. The CEO, Laurent Ferreira, pretty much lays out the two huge themes for the year. First, he says they delivered strong financial performance, hitting all their goals, which, is impressive enough on its own. But the second part is the kicker. They did all that while completing the largest acquisition in their entire history. So this wasn't just another good year. No way. This was a fundamental reshaping of the entire company.
So yeah, the financial results were strong, for sure. But the real story here, the one we're going to dig into, isn't just about profit margins. It's about a massive strategic pivot. It's the story of a bank that was always seen as this regional powerhouse, making a super bold play to become a true coast-to-coast national giant. Okay, but before we get to that massive shopping spree, let's take a quick look under the hood at the engine that was powering all these big moves. I mean, you can't just go out and make billion-dollar deals if you're not in a strong position, right? So how did the bank's core business actually do? Let's check out the scorecard.
First up, adjusted earnings per share. They grew by a very healthy 9%, and that's right in the sweet spot of their medium-term goal, which is between 5 and 10%. So what's really crucial to understand here is that even with all the chaos and distraction of a massive acquisition, they were still delivering really strong growth for their shareholders. That's key. Next up, we've got adjusted return on equity, hitting 15.3%. Now, this number is a really important measure of profitability, basically how well a bank is using its money to make more money. Landing right in the middle of their 15 to 20% target, that tells you the bank's operations are running super smoothly and effectively.
Okay, now this number, the CET1 capital ratio. I know it sounds a bit technical, but trust me, it's incredibly important. The easiest way to think about it is like the bank's financial shock absorber. And a ratio of 13.75%, that is exceptionally strong. It's like having a fortress. And it's this rock-solid foundation that gave them the firepower and really the confidence to go on the attack. And that brings us to the main event, the billion-dollar shopping spree. I mean, this is the moment where National Bank went from just being a strong performer to being a history-making transformer. They pulled off two massive deals that completely, fundamentally changed their footprint across Canada.
So the biggest move of all was buying Canadian Western Bank. And the strategy here is just so clear and so important. CWB is based out in Edmonton, so this move instantly gave National Bank a huge presence in Western Canada. We're talking overnight. This one single deal just put their entire national growth strategy into hyperdrive. It was a total game changer.
And you'd think that would be enough for 1 year. But nope. As the year was winding down, they made another major move. They announced a deal to scoop up huge portfolios from Laurentian Bank. So if the CWB deal was all about expanding west, this one was about doubling down on their home turf in Quebec. I mean, they added over $11 billion in assets and something like 260,000 new clients. Just amazing. They were expanding and consolidating all at the same time.
So the big question is, why? Right? Why spend billions and billions of dollars on these massive deals? Well, it all comes down to unlocking value. And in the world of mergers and acquisitions, that value often boils down to one very important concept. And that concept is synergies. I know, it's a bit of corporate jargon, but the idea is actually really simple. It's the belief that 1 + 1 can equal 3, that the combined company will be worth more than the two separate parts. And you get there in two main ways. First, by cutting costs you don't need anymore. And second, by creating new ways to make money, like, say, selling National Bank's awesome wealth management products to all of CWB's former customers. And this really shows you the cost-saving side of things. The bank expects to find around $270 million in savings just from the CWD deal alone. But here's the kicker. They're on track to get those savings more than a year ahead of schedule. That just screams strong execution.
But it's not just about cutting costs, right? It's about growth. And on that front, the bank is also forecasting somewhere between $200 and $250 million in new revenue by 2028, all coming from the new opportunities the CW deal created. So when you add it all up, the total value being unlocked here is massive. We're talking nearly $500 million.
So, okay, after a year of historic deals, strong performance, you have to ask, what's next? What does the road ahead even look like for this newly transformed national bank? Well, the bank's leadership has been very, very clear about this. With their foundation stronger than ever and these huge acquisitions being folded in, the focus is now squarely on growth and delivering even better returns for shareholders. And they've laid out a very specific and, I gotta say, very ambitious plan.
And here is that plan visualized. This chart shows their target for return on equity. They're starting from an already strong base, and they're aiming to hit over 17% by 2027. And look, this isn't just some vague hope. It's a concrete target, and it's all driven by the massive value they expect to unlock from both the CWB and the Laurentian Bank deals.
Which brings us right back to our opening thought. After a year where they hit all their targets, pulled off the biggest acquisition in their history, and laid out a crystal clear path to even greater profits, National Bank has completely changed its scale and its scope. Seriously. The question now isn't, can they compete with the big guys? No, the question is, just how big can they become?